Yes, guys. Am I live now? Is it live, guys? Yes. Okay. Yes. Hello, everyone. A very good morning to all of you, and welcome back to our income tax revision classes. Okay. So now, till now, we have done some of the very much bulky chapters which are finished revision, which is your capital gain, PGPP, your first two house property, as well as salary head of income. So for all that chapter, you can just see the previous lectures. Now we will go with our next chapter, that is income from other sources. The last head of income, the chotu head of income, and then we'll do all the remaining balance chapters. Okay. So guys, yeah, it's here. Okay, so now here in PGP head of income, we are already seeing that whenever you do anything as your profession or as your business, it will be taxed under the head your PGBP. The thing is what here, before going to any particular head, okay, before going to any respective head, the income will first say that whether it is your business or profession. If yes, it is going to be export entitlement license, your duty free passbook, your duty drawback, all of these are going to be taxable here. Now we are also seeing that the profit from the business has to be kept in three different blocks. The first block was forward contract and your derivatives entered through recognized stock exchange. So other than this four, all the contract where there is no actual delivery and only settlement through the price is known as speculation business. Keep this profit separate. Also keep the section 35 UAD all businesses profit separate. Can you just remember? Okay, we'll go on that later on further. So the now we are going to learn all different allowability and disallowability of different kind of expenditure. First thing is what, when your if your property is rented, your plant and machine is rented, then your expenditure for your rent, maintenance expenditure, your revenue repairs are allowed to you. If you do any capital repair, please capitalize them and claim depreciation. Now your depreciation, we have to understand that depreciation is claimed on same asset, same block. It's lagging. Okay, wait a minute. Yeah, just. Is it fine now, guys? Why it's lagging now here? Its speed is. See if it is still lagging, guys. I feel now it would be fine. Just check now. Now it's stable. It's not getting stable, yeah. There is some problem from. I feel there is some problem from YouTube because my internet connection is all fine. There is some problem from because it's getting a lot varying. Just a second. Give me a minute, guys. S- Sir, it is getting very much lagged, sir. Sorry. Yeah, because I have just sent you the video recording as well. Why it is getting so much change? Like it is going to be very much varying. Just check it once. Yeah, yeah, okay. Yes, sir. Hello. Has has oh sir, it's hitting lag, sir. I have sure, take it. I already said once I feel yeah. There would be photo in your WhatsApp chat. Yeah, just a minute, sir. Where my need is gone. Class lag account. Wait a minute, sir. I don't know where my need is gone. अरे यार, I have to download it. I don't feel. Yeah, just a second, it's opening. Yeah, take the ID 892. I feel it's stable now. Yes, guys, is it stable now, guys? No. Hello? From? Yeah, I'm just occupied in the class right now. Shall I call you after 2? Yeah, okay. Oh, just a minute, sir. I will try to change my camera and everything. Yeah, I'm just doing that. My normal camera, na? I will just do it. Acha, OBS. Okay, I should go in OBS. Just a minute. What I have to do, I don't know. Just a minute. Huh? I have to open OBS and okay. Wait a minute. Okay. Okay. Just a minute, I'll do it. Which microphone is mine? There are many microphones at this USB. My voice is fine there. See on Zoom. Hello. 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 Is my voice there, sir, on Zoom? Yes, yes, sir. Yes, sir. Audible. Audible. Okay. So yeah, you can go live. So you are going live from your end. Ah, yes, sir. We're on live only, sir. No. Acha, you live. Shall I start then? Yes, sir. Okay. Thank you so much, sir. So you are going live from your end. Start then. Just a second, guys. Yes. Hello, everyone. I'm so much sorry for the delay of this 20 minutes. I don't know why suddenly the lag start in the morning. All the classes were very right. Okay. So now let's continue. Just a minute. I will just start the YouTube here. Yeah. Okay. Perfect. So to start the revision from starting. Okay. No problem. I'm starting it quickly. So let's get back where we were already. Yes, guys. So here we have already seen. Yeah, we have seen the PGBB chapter in our last session. Now we are just let's. अरे यार, yes, जीवन sir. Perfect now. Is it now correct, sir? Audio. Yeah, the things were not clear, so I have been here in this way now. Okay. Is my audio and video all clear to you now? Okay, let's move ahead, guys. Yes, so we were on the revision of PGBP, rapid revision, and then we'll go forward with our income from other sources chapter. So, guys, now here in PGBP, we have already seen that first thing, the first state of income is going to be whenever you earn an income, first you will see whether it is your business or profession income. If so, it will come under business. If not, then it will go to any other head, right? So here in which income will be your business, all the income related to your business and profession will be under this head, including any gifts you have received because of the relation of your business will be here again in PGBP. Thereafter, further, whatever what we say, whatever export entitlement license earning you get it, whatever duty drawback you get it, whatever money you get it by selling this duty drawback or this duty entitlement passbook, this all will be taxable under the head PGBP, including salary. Yeah, including the salary of partner from a partnership firm will be taxable in your PGBP. Okay, please remember this. Further thereafter, we have seen the further part. In that, we have seen that in PGBP, you have to keep the income separate for the separate blocks. So the income of your speculation will be kept separate. Income from your specified business will be kept separate, and the balance income will be kept separate. Okay. So now your thing is what? That, just a second. Yeah. So here, what is the speculation income? Whenever there is actual sell, so it is a normal income. Whenever there is sale, but there is no delivery of goods. Whenever there is no delivery of goods in the actual contract, in this case, it will be a speculation income. So how does this happen? They just clear the transaction on the prices. There is no actual delivery of the goods. In this case, it is going to be your speculation income. But government has said that specifically 4 cases where this income will be not known as speculation income. One of them is your hedging contract for raw material, hedging your forward contracts, and your trading in derivatives. This 4 of this is not going to be your speculation income. Other than that, all of the transaction where there is no actual delivery, it will go under your speculation income. Going further, then we have started with different expenditures or allowability of different expenditure. So if it is your land, building, or plant and machinery, you have taken on rent working for business. In this case, rent is allowed. All other expenditure of maintenance is allowed. Rates, taxes, everything is allowed. Only if the expenditure are capital expenditure, please capitalize them and claim depreciation. Coming to depreciation, depreciation is here WDV compulsory for all. Only for the power sector, they have given an option to go under WDV or SLM method. In WDV, we follow same class, same rate method. Whenever there is same class, same rate, it is going to be taxable there. A new block will be created. Okay, there were different rates which we have already seen. There are for all the different types of assets, and there were 4 classes of asset, which was your land and building, plant and machinery, furniture, and your intangible assets. Please remember, if the asset is used for more than 180 days in the year of acquisition, it will be getting full depreciation. Less than 180 days in the year of acquisition, it will get half depreciation. But please remember, if it is put to use into some else year, so there will be no depreciation, and in some else year, the depreciation will be full, even if the asset is used for single day as well. Because the less than 180 days situation is applicable for the asset in the year in which they are acquired, for that year only. For the balance year, the depreciation would be full whenever you put them into the practice, put to use. Okay. Thereafter, further, we have seen here the additional depreciation. Additional depreciation is for the manufacturing concerns. But please remember, the asset should be installed in your factory only, not in residential property. Neither it should be aircraft or ship. And the additional depreciation rate is 20%. If the asset is used for less than 100 days, 20% will be in this year, and 20% in 10% in this year, 10% in the next year. If the asset is in the state of your, if your organization in the state of your Bihar, Andhra Pradesh, Telangana, or West Bengal, in this case, you'll get additional depreciation of 35%. So this 20 will be turned into 35%. Again, it will get half off if it is less than 180 days. But please don't forget to take the balance half in the next financial year. Going forward, we have seen what different things will be added into cost and what will be the cost of asset in the separate special cases. Individually, we have seen that. And then we have gone to the SLM method, which will be applicable for the power sector, and optional thing. Here, all the assets will be done depreciated singularly on their, depending upon their useful life. And remember, if you sell this asset in future, so if your sell value is less than WDV, it will debit it to the P&L as terminal depreciation. If your sell value is more than WDV, less than cost, this difference will be credited to the P&L as your balancing charge. And if the sell value is more than cost, so WDV to cost will be balancing charge, and above cost will be your capital gain. Also remember, whenever you have capital assets, your depreciable assets which are sold, in that case, the capital gain is there only in three cases: when either block cease to exist, that is, there is no assets in the block, or there is no WDV in the block, or they both have ceased to exist. In this case, the capital gain is calculated. But when there is asset and there is WDV, if both things are there, in that case, as you have learned, the capital gains will be not calculated. You will depreciate the asset normally. Okay, and always remember, the depreciation in case of the capital gain in case of depreciable asset will be always short-term capital gain. Okay. Going further from there, then we have seen the interest on borrowed capital that will be capitalized up to the date of put to use for the any particular asset. If you have used some asset for particularly for your business and partly for your private purpose, then in that case you have to proportionate the depreciation. Only business depreciation will be allowed. Then we came to section 35, which speaks about your scientific research. Here we have seen there are two things: either you do your research in-house or you lend amount to some other organization. If you do your in-house, there are two things: whether you are doing the research before starting of your business, only 3 years research is allowed, and that too revenue expenditure, only salary excluding perks is allowed, and in capital expenditure other than land, all expenditure allowed. If you are doing the research all together with the business, in this case, the perquisites which are allowed. In this case, all the salary is allowed, all the revenue expenditure are allowed, and in case of your fixed capital expenditure other than land, all expenditure are 100% allowed. If you donate your amount to someone, in that case, if you donate to approved association, institute, college, university for scientific as well as statistical research, 100% deduction is applicable. If you donate to national laboratory or IIT, 100% deduction is applicable. If you donate to approved company, please remember 100% is allowed. If approval removed later on, no problem, you will get your complete deduction. Okay, further preliminary expenditure will be allowed in the 5 equal installments, right? And thereafter, voluntary retirement scheme expenditure, this will be also allowed to you in 5 equal installment. Then we go to section 35AD, which talks about specified business. So these are the 14 businesses. If you remember the story, the factory was of what? Cold chain facility for cold chain facility, warehouse for agriculture produce, warehouse for sugar, fertilizer factory, iron ore pipeline, iron ore and cross country pipeline. These were 6 business. Honey keeping, 7th business, slum redevelopment, 8th business, 9th is your 2-star plus hotel, 10th is your 100 plus beds hospital. Above that, all of this has infrastructure, and there is fabrication unit. So these are all 14 businesses for which even if there is capital expenditure or whatever the expenditure is there, it will be allowed in the first year itself completely. Okay, and further, that there should be a new plant and machinery, but for this, even if you import second-hand plant and machinery, it will be considered new, and total plant and machinery 20% can be old as well. Further, we have seen employers' contribution for all recognized provident fund, recognized superannuation fund, statutory provident fund, all good names, it is allowed. Bad names, it is not allowed. And then we have gone to the stock in trade for your livestock. So please remember, when the livestock gets permanently useless for your purpose, or it gets that case, you will hit directly to the P&L. No depreciation has to be provided here. Further, in case of bad debt, there is no provision to be made, that is not allowed, but actual bad debts are allowed. But when you are taking the actual bad debt, if the assessing officer has disallowed you sometime, some amount, and in future if you recover it back, so first you will subtract it from the disallowed and the balance will be only get taxable. Then we have gone towards the CSR expenditure, which is not allowed, and IPO, FPO, right share expenditure not allowed. Other than that, that will be allowed to you. And in case of taxes, direct tax of any type is not allowed. Indirect tax is allowed. Interest on indirect tax is allowed, but penalty is not allowed because it is breach of law. But breach of contract penalty is allowed to you. For doctor, freebies are not allowed. And then we gone to the tedious part of the PGBP chapter, which talk that whenever you are paying to a non-resident, and if you don't do TDS during the previous year, or during the previous years, and you don't pay it before return filing due date, here the disallowance would be 100%. In case of your resident individual, the disallowance would be 30%, and this both will be allowed in future whenever you pay the TDS. But the last case was when you pay the salary to a non-resident or salary outside India. In this case, if you don't do TDS, 100% will be disallowed, and this will never ever be allowed in your future as well. Going further, the next part, which was about your specified any extra amount you paid to your relative, which is section 40A2. Relative, if you're paying any excess amount, that will be disallowed. 40A3, if you're paying anyone more than 10,000 in a single person in a single day, disallowed. Thereafter, we have gone to the 6DD rule, where the payment of more than 10,000 is allowed. That is, first, in the case of transporter, 35,000 is the limit. Second, in case of retirement benefit, 50,000 is the limit. If anyone is paying salary to someone who is placed rural, then also there is no problem. If it is paid where banks are not available, it's fine. If you are paying for your agricultural produce, including poultry farming, fishing, where it is cash payment is allowed, no problem at all. Okay. Please remember this certain conditions. This can be one of your beautiful MCQ question. Next comes your section 43B, certain payments which are allowed only on payable basis. There were 8 such payments. 3 were for employees. One was your leave encashment. Another was your RPF, SPF, everything. And the last one was your bonus. These all things are applicable, allowed to you only on paid basis, not on payable basis. Next 2 was for government. One was for your taxes, duty, cess, and your IRCTC ka any asset ka payment. And the last 2 were for banks and NBFC, the interest payment. All of this is allowed only on the payment basis, not on the payable basis. Further, thereafter, we have seen, what we have gone through, and then we have seen, we have come into the last part of this chapter, which talks about 44AA. 44AA, I have given you a beautiful chart where you will learn everything. If the person is specified, that is engineer, chartered accountant, CS, architect, or something like that. In this case, we will see gross receipts of all last 3 years. If it is above 1.5 lakh, then he has to maintain books as per Rule 60. And no, then you do not need to maintain the books. If he's doctor, in that case, you have to maintain an extra daily case register as well. For all other SSC, if is individual HUF, your income is more than 2.5 lakhs or your turnover is more than 25 lakhs, then your books of account. For all other SSC, the limit is 1.2 lakh or turnover limit is 10 lakhs. Okay, going further, 44AD talks about the audit. So audit has to be done by a chartered accountant if your turnover is more than 1 crore during a previous year. If not audited, you will get a penalty of 1.5 lakh or 5% of your turnover, whichever is lower. Further, 44AD is a presumptive income section, which talks about if your business turnover is less than 2 crore and you opt for this, it's an optional. You will directly get profit 8% of your turnover. Do not require to maintain all books of account. Just maintain your turnover limit. That's more than sufficient. Also, if you have received any turnover in cash, the limit is 6%. Further, if it is a business, if it's a profession, the limit is 50 lakhs and the section is 44ADA. In this case, your profit would be directly assumed at 50% of your gross receipts. Okay. So now, if you offer the 44AD, you do not require to do audit. But if you do not offer 44AD and your turnover is above 1 crore, you have to do your audits. Next was section 44AE, which is for your transporter, which is that if your goods vehicle are about 12,000 kg, that is about 12 ton, it is heavy goods vehicle. Below 12,000 ton is light good vehicle. For light good vehicle, the present income is 7,500 per month per vehicle owned. Use kitni bhi karo, owned jitni rahegi utni aapki rahegi. Next is your for heavy goods vehicle. In that case, for 1,000 rupees per ton per month would be your income. So if a vehicle is of 18 tons, so in this case the income will be 18,000 per month. So you will calculate this presumptive income and then you will include this as your PGBP. It is section for only and only your transporters. Next comes into picture is the last part of the chapter, which talks about the remuneration paid to partners. In this case, the remuneration, maximum remuneration which is allowed to pay to the partner is for first 3 lakh of your profit is 90%, which is 2,70,000, and the balance, it is only 60% of the profits. Please remember, if that particular person, if any particular company is in loss, still they can pay 1,50,000 remuneration, because on first 3 lakh it is 90% or 1.5 lakh, whichever is higher. Okay, and then if you give a loan to your partnership firm or capital to partnership firm, maximum interest payable is 12% simple interest in the partnership capacity. But say I'm partner in individual capacity, I'm getting interest in the HUF capacity, no limit. In partner in HUF capacity, getting interest in individual capacity, no limit. Everyone clear? So with this, we finish our rapid revision of chapter PGBP. I'm very, very sorry. We are very much late today, but don't worry. We are at a good pace and good speed. We will complete everything very much nicely. Everyone clear? Please let me know if you have any query in PGBP. If no query, then we'll start our actual revision for income from other sources from here. Yes, everyone. Any queries so far? Yes, everyone. Okay, very good. So let's come to the last head of income, that is your reminder head of income, also known as income from other sources. So now guys, here in this income from other sources, whenever your income is not taxable in any of the above head, please bring it here and tax it here in your income from other sources. Okay. So guys, now here, just a second. Oh yes, Hriday, format for your PGBP. Very good. Thank you for reminding me. Actually, we haven't taken any question now, so I couldn't say you. See, you will write your PGBP or profits as per accounts, or given profit in your question, minus, all right, add disallowed expenditure. You will keep on adding them here, all the disallowed expenditure, subtract allowed expenditure. So which are allowed, which may haven't been taken yet, that you will subtract it here. So you will get your PGBP. As simple as that. Okay, Hriday? Hriday, it seems तुमने first time कुछ बोला है, because I have never seen you in chat. Stay active, Hriday. Okay. Don't worry, guys. What happened? I'm planning that we have tomorrow one session and we'll have one more session as we have missed our first session. So I'm planning our gross total income questions. So if that we do now for 2 hours, your all the queries, and they're so interesting. You must have seen in your study material, right? So we'll take that question. So your that question that covers almost all heads of income. So everything will be very nicely covered in that all questions. Okay. So you will get all things used to with that in your gross total income sessions. Today in evening you have a class, right? Today evening you have a class of revision. Am I correct? Okay. Let me know that in your let me know that, guys. Okay. Let's go to the next part. The next part is your last head of income, which is your last head of income, which is your income from other sources. So see, guys, here, pay attention. Interest on securities. If securities are held as stock in trade, Okay, as your class is there today, so maybe tomorrow, I think you don't have any class in the evening, so maybe tomorrow evening we will take a session and we'll only solve questions in that session. Okay. So guys, now here's interest on securities. If securities are held as stock in trade, so the interest is taxable under PGBP. Please remember this. Rent from letting out of property like plant machinery. See, rent of letting out a house property, a land and building apparento is taxable in your house property. But other than that, if I rent out a plant and machinery, if I rent out any other thing, so that rent will be taxable here in iOS if it is not my business. Further, subletting of house property. I have taken on rent from someone and I'm letting it out again. So even this will be taxable income from other sources. Dividend on shares will be taxable here. Winnings from lottery, betting, gambling, which are taxed at flat 30%, will be taxed in income from other sources. Interest on bank deposit and loan given will be also taxed here. Further, royalty income, director sitting fees, agricultural income from any agriculture land outside India, because inside India then it is exempt. Outside India will be taxable here. Further, salary of MP, MLA, subletting of property, income tax refund, any income on investment, and any amount received under family pension. If the company pays you and you receive as a family pension, this will be taxable. All these things will be taxable in your income from other sources. So this is a small inclusive list of your income from other sources. Other than that, also if there is any income which is not going in any other head, it will be taxable here. Just go through this list once, guys, everyone carefully. It can be one of your MCQ question. Any one of this can become your one-liner MCQ question here. Okay. Further, this is the interesting part also. Interest on compulsory acquisition of capital asset. So if you receive any interest on compulsory acquisition, okay, that interest will be taxable here after getting 50% deduction. So for example, say government has compulsorily acquired my property, but they have paid me compensation very late, so I also got the interest. So this interest will be taxable in income from other source after flat 50% deduction. And if you have any post office saving account, so for individual deduction is 3,500, for joint the deduction is 7,000. Okay. Taking further, one more thing I wanted to say here is, yeah, also forfeited amount. If you remember, we have learned that whenever in house property, if you have forfeited the amount of any particular buyer, in this case, if this forfeiture is before 1414, that is going to be reduced from your cost of acquisition before indexation. But if it is after 1414, in that case, it is going to be taxable in the head income from other source in the respective financial year. Okay, going to the next part, taxation of gifts. So now this is the most important part of the chapter. There are only two major parts in this chapter. One is taxation of gifts and another is your deep dividend. Okay, so now in your taxation of your gifts, please remember, whenever you receive any gift, okay, whenever you receive any gift, put, see this, whether the gift is on the occasion of MRID HUTLATIC. Okay. If yes, section 56(2)(10) not applicable, gift is exempt. So if you get a gift on any of the one occasion of this, in this case, it is going to be absolutely exempt. Okay. So what are these occasions? So pay attention, everyone. These occasions are, any gift received on this occasion is absolutely exempt. Remember, if the gift is due to the business relationship, it will be taxable in PGBP. Okay. So first is your on the occasion of marriage. So any gift received on the occasion of marriage is fully exempt. Whatever, whoever gives you this gift, if it is on the occasion of marriage, it is fully exempt. They consider the marriage itself is a very difficult task, right? So even the gift on the occasion of marriage is absolutely exempt. Next, if you receive from any relative, gifts from any relative is also fully exempt. But when we are saying relative, so please check the definition of all relatives here. So you will be very much known from whom you have to take the gifts. Okay. So see guys here, in case of relative, if you are individual assessee, okay, see who are your relative? You are obviously, just a minute, yeah, your brother and sister with their spouses. Your brother and sister with their spouses are your relative. You can take as much gift as you want from them. Your mother and father, obviously, your mother's father, brother and sister with their spouses. So your mother, father, so it can be you maternal uncle, mama ji, in what you say in Hindi, and in mausi, what you say in Hindi for your sister's sister, mother's sister. Okay, so the gifts from your brother, sister, their spouses, mother, father, their spouses, any linear ascendant and spouse, like your grandmother, grandfather, all of them, any linear descendant and your spouses and their spouses. You can receive as many gifts as you want from them. Further, your spouse is obviously your relative, plus her brother, sister, and their spouses, her mother, father. That's it. Her mother's father, brother, and sister are not included. That's the only difference in the case of spouse. And linear ascendant and linear descendant are obviously included there. Everyone clear? Just go through this diagram, draw this diagram with you. Ask me if you have any queries, guys. And just give me a minute. I will be back. In the meantime, you just draw this diagram. Yes. Done, everyone? So, your mother, father, their spouses, your grandmother, grandfather, your brother, sister, their spouses, your own spouse, her brother, sister, and spouses, and your mother, father, and grandmother, father as well. Okay. Further, pay attention, everyone. So, as soon as you will receive gift, first you will test for the MRID HUTLA condition. Okay, whether it is on marriage. Okay, we are on relative only. Okay, so marriage and relative is done. Next is under will on inheritance. So if you receive any gift from anyone under any will or inheritance, it is also fully exempt. Further, in contemplation of death, if anyone has died and that's why you have got it, so even that is going to be exempt. Further, from any university, or any educational institute, if you receive it, even that time it is going to be fully exempt. Next, local authority. Further, trust registered under section 12A, that is NGO, hospital or medical institution, And any trust created solely for the benefit of your purpose. So any trust is created for only my benefit. So whatever they will give it to me, even that is going to be exempt. Fund, trust, hospital, medical institution, and any transaction which are not regarded as a transfer. That is your capital gains value sections from any other such condition as may be prescribed in future. So these are all the basic conditions, in which case the gift is not going to be taxable. So M is for marriage, R is for your relative, I is for inheritance, D is for contemplation of death, H is for hospital, U is for university, T is for trust, S, L is for local authority, any other, and any other further any other institute or any other in future if anything will be prescribed. So if you receive gift from these people, whatever the amount may be, like be in thousands, lakhs or crores, it is going to be fully exempt. Further, okay, otherwise than that is going to be fully taxable. Everything clear? Further, now if it is not among one of these cases, then you will bring it further and you will divide your gifts into three parts. So whatever are your gifts, we'll bring it further and we'll divide into three different parts. The first part is money. Whatever are your cash gifts. Second is your movable property, but only and only shares, security, and our JDPSAO of your capital gains. And the last part is your immovable property. So if you receive, so as soon as you receive a gift, check it whether it is MID, HUTLA. If it is that, simply exempt it. If not, bring it further, divide into three parts. Okay, which will be these three parts? The first part is going to be of your cash. Second part is of your movable property, but only in movable property you will consider only SHJDPSAO. That is shares, security, jewelry, drawing, painting, sculpture, any work, and any other collection of art. And the last would be your immovable property. Okay, these three things will be, you will divide your gifts into these three parts. The first part is money. So total money in a year, cash gifts are allowed to you is up to 50,000 rupees only. If this cash gift goes above 50,000, all the 50,000 are taxable. Again, I'm repeating, total cash gift in a financial year is allowed up to 50,000. Above this is fully taxable. Okay. So here, please remember total. Again, I'm saying if it is relative or any other conditions, keep it separate. Other than that will be taxable. Further, if it is movable property, okay, that is SHJDPSAO. If it is any of your movable property, in this case, in the case of movable property, see if it is without consideration. If it is without consideration, if you have received any gift, movable property, that can be jewelry, drawing, painting, sculpture, without any consideration, and your fair market value is above 50,000, fully taxable. If you have paid some consideration, but the difference in the consideration and fair market value is above 50,000, fully taxable. Similarly, for your immovable property as well, that if you have received any immovable property, check your stamp duty value. If you have got it for free and stamp duty value is above 50,000, fully taxable. If you have received it for inadequate consideration, in that case, if the difference is in your consideration and stamp duty value above 50,000, it is fully taxable. So please remember, as soon as you receive any gifts, okay, first put it to the test of MRIDHUTLAITC. If any one of this condition is there, this gift is exempt. If not, take it further. Here what we will do, we will bring it further, and now here we will distribute them on three things. One in cash, other in your personal movable property, and next is your immovable property. All the things have separate 50,000 allowability. Okay, in cash total 50,000 goes above 50,000, fully taxable. Personal movable property, only JDPSAO, also SS. Shares and securities are included here. If that is above 50,000 or the difference is 50,000, it is fully taxable. Immovable property, if it is a difference is 50,000 or the SD 50,000, it is also fully taxable. Everyone clear? So this is the taxability of your gifts. Very interesting and very, very, very important. Okay. So if you remember this, then it's this IOS chapter is almost done. And please remember, whatever we all learned this, all of all this part is section 56 to 10. So one section is giving you so much information. So you can simply quote this section wherever you want. So in case of gift, it is going to be taxable under section 56 to 10, and the taxability will be as this. Okay. So I will suggest you just go through this, guys. Just draw this diagram if you want to. Take a screenshot of this. And let me know if you guys have any queries. Are you perfect with this? Shall we move forward, or you guys have any queries? Yes, let me know if you guys have any queries. Yes, everyone, come on, say me. Okay. Now, as I've said, you see what this JDPSO includes: shares and securities. See what it include: share and securities, jewelry, drawing, painting, sculpture, archaeological collection, any other work of art, including bullion. You know what is bullion? The gold bricks. And as well, they have included virtual digital asset as well in this definition. So all of this, if you get as a gift, the limit is 50,000. Above that, it will be fully taxable. So please remember, guys, pay attention. This is an interesting thing here. If you are transferring your immovable property as a capital asset, section 50C will come for your saving. The stamp duty value should be not more than 110% of actual consideration. If that is not there, section 43CA is your PGBP wala section. Okay. So if anyone is transferring, now pay attention. Say there is a question of Ramesh in your study material of this. Say I'm transferring the property. If this property is stock in trade to me, section 50C will come, and which says that your sale consideration should be not less than 110% of the stamp duty value. So sorry, your stamp duty value should be not more than 110% of your sale consideration. If I sell this as a capital asset, then 43CA will come. Sorry, मैंने उल्टा बोला. Wait a minute. If you sell this as your stock in trade, then 43CA will come. If it is a capital gain, then 50C will come. So how you are having your asset? If I am a builder, I am selling it. It's my stock in trade. 43 CA will come. If I am having it as a capital asset, 50 C will come. And in the hands of receiver, 56 to 10 will come, which says that if you are receiving any immovable property and the stamp duty value and your consideration is difference is more than 110%, it is taxable in his hand as well. Okay, so you have to be very careful if such question comes. There is one question of this. I will suggest you please go through that. I'll just say you the name of the question. There is one question in your study material regarding this only. Yeah, hurry wala question. Okay, go through this hurry wala question. You will understand it very much nicely. Okay, let's go forward further. Next, as I've already said you, compensation of termination of employment. If you get any compensation on completion of employment, as now you are not in any employer-employee relationship, and you get any payment for such, it will taxable under section 56 to 11. Further, any advance amount forfeited. This already we have seen that if the amount is forfeited after 1/4/2014, it will be taxed under income from other source in respective year. For the taxation of dividend, dividend will be taxable in the income from other source, but not only the actual normal dividend which you receive, but also further, if the dividend is on like dividend includes deemed dividend. Deemed dividend. There are 5 sections of this. The section is 222A, B, C, D, and E. 5 sections of deemed dividend. So normally when you receive dividend, that is normal dividend. Further, in these 5 conditions, we will treat the amount as a dividend to you. What are these 5 conditions? So see here, any asset received on distribution. So rather than giving a dividend, company gives you asset. So these assets are going to be your deemed dividend. Okay. B, distribution. So if there is any distribution of debenture to the shareholders, so this is also going to be the deemed dividend. So what happened now? If company gives a dividend, so what happened? It was they are trying to give the dividend in cash, then it is going to be taxable, right? So they were trying to hide this dividend. So government has got this 5 different deemed dividend as well. So even if you don't say dividend, but you do any of this thing, it will be known as deemed dividend and taxable in income from other sources. What are these 5 things? First is distribution of assets. So company ने dividend देने की जगह अपना TV, fridge, AC बांट दिया. Second, distribution of debentures. So company, rather than giving you amount in cash, they have given you debentures. Okay. Third, distribution of assets on liquidation. So on liquidation, if they have given some assets, even that is going to be deemed dividend. Fourth is reduction of share of capital. They have reduced the share of capital and they have repaid the amount balance. Even that will be considered as deemed dividend. So see, you can remember this section like this. A is for distribution of assets. B is for debenture. C is for on close down. Like that is when they are liquidation. Close down, transfer of assets. And D was for your, that was what? Just a minute. Yeah, reduction of share capital. Reduction of share capital. Okay, so these are the 4 sections of your deemed dividend. So whatever amount you receive in this, that will be taxable as deemed dividend. The last is section 222E, which says that it's something different, which says that if you have any closely held company and that closely held company gives you loan, the closely held company gives you loan, this loan will be treated as deemed dividend. Okay, very interesting and very important section. See, Loans and advances by a closely held company to a shareholder. Any payment by a company in the public who are not substantially interested and gives a beneficial owner is 10%. So if anyone is having a beneficial owner having ownership in a company of more than 10% and the company gives them loan, this loan will be also treated as deemed dividend. So these are 5 sections of your deemed dividend. Okay. Everyone clear? So this is the major part of your income from other sources, which we finish it here. The first and the foremost important part is your taxation of your gifts, and then is your deemed dividend. Other than that, if there is any income you are generating, right, from the sale of plant and machinery, sale of any other goods, sorry, not sale of plant and machinery, from renting of your plant and machinery or any subletting of houses, which is not your business. So this will also come into your income from other sources. So whatever expenditure you do for getting this income will be allowed as a deduction. So see here, just like in PGBP, we have seen deductions. Here also there are some deductions. Why they are given here? Because say for example, I am teaching. I have just one plant and machinery which I have given on rent. My profession is teaching only, but I have this plant and machinery given on rent. So rent from this plant and machinery will be taxable in income from other sources as it's not my business. So what different items I can deduct from this income? So pay attention. Deduction, you can deduct all the items which are in relation to your this income. Okay, all the expenditure which I'm earning to get this income are allowed to deduct, other than any personal expenditure, any interest chargeable to tax under the act payable outside India on which TDS is not been done, any payment made to Indian and salary. So just like the TDS section, here also, if I have done any payment to any worker, say who is from outside India, and I haven't done the TDS, or I'm paying to any other agency to which I haven't done the TDS, there will be 30% disallowance in case of Indian, and in case of non-resident, 100% disallowance would be attracted to me in income from other source as well. Further, if you are paying to any relative unreasonable charge, say I am paying my wife of maintaining that machine for say 10-20,000 rupees per month, but she don't know anything about machine. So in that case also, it is going to be fully disallowed. Further, disallowance of aggregate payment if made than more than 10,000. If I done any expenditure relating to that plant and machinery for about 10,000 in cash, even that is disallowed. 30% is disallowed if I haven't done the TDS for any of the payment, and no deduction in respect of expenditure if you have income of lottery, betting, gambling, horse races and everything. यहाँ पे आपको कोई भी expenditure deduction इसमें नहीं मिलेगा, ना ही आपको कोई what do you say other allowance मिलेगा. Okay, so nothing can be deducted from the income of lottery, betting, gambling, anything that is going to be flat taxable at 30%. And other than that, if you have any income which comes under income from other sources, you can deduct all the expenditure which you have carried out to all that income other than this all expenditure on which you haven't done the TDS, you paid more to your relatives, and if you have paid more than 10,000 during a month. Okay, with this, your income from other source chapter comes to an end. Yes, guys, everything clear? Come on, let me know if you have any queries so far. Where is my bottle? Yes, guys. So this is all about you, the chapter, income from other sources. Do you have any queries in this? Let me take you to the one interesting question in the meantime. That hurry वाला question, I am very much assured कि आप घर पे नहीं करोगे, इतने busy रहते हो आप घर पर. Everyone is done with this. Say me quickly, then we'll move forward. Okay. Read this question, guys. It's very interesting and very important for your understanding. Hari, a property dealer, sold a building in the course of his business to his friend Rajesh, who is dealer in automobile spare parts. Also, there is one more thing of section 50C I just forgot to say you. Guys, see, pay attention. Now, what happens? See, when I sell a property, first agreement happens, and then we apply for the registration and everything, and then we go for the registration. Say in between this, if the SDV rose, say agreement date ke din SDV tha 50 lakhs and registration it is 70 lakhs. What SDV you will accept? So guys, here you will accept SDV. Generally, you will accept SDV as on date of registration. But if you are receive some advance in bank account on agreement date, then we will consider the SDV as on agreement date. This is also a part of section 50C. Okay. Again, I'm saying generally the SDV as on date of agreement will be looked on to. But if on date of registration you have paid some advance, in that case, the SDV as on date of registration, sorry, I'm so sorry, I just mistaken everything. Wait a minute. Generally, the SDV as on date of registration will be taken. But if on the date of agreement you have taken some advance, in that case, it will come as a date, as your, what we say. In that case, that will come agreement date wala SDV. Everyone clear? So now we are seeing this question. Pay attention, everyone. Hari is a property dealer in first example. Pay attention. Hari is a property dealer. So now same here, the property would be what? His stock in trade. Am I right? Further, he sells to his friend Rajesh, who is dealer in automobile spare part, for 90 lakh rupees as on 1/1/23. So he sold a property on 1/1/23 for 90 lakh rupees to his friend Rajesh. This is Hari. This is Rajesh. I said in Rajesh wala question. Hey, Ramesh wala tha, sorry. When the stamp duty value was 1,50,000. Sorry, 150 lakhs. That is 1.5 crore. So when you sold it, the stamp duty value was 1.5 crore. Further, the agreement was, however, entered on 1/9/22 when the stamp duty value is 1 crore 40 lakhs. So this is the registration date. Agreement date was done on 1/9, right? 22 when the stamp duty value was 1.4 crore. Are you understanding? So see, from agreement date to registration date, the stamp duty rose. Which you will consider for the sale? You will consider as on date of registration normally. But if some advance is received in bank account, then we'll receive as per the agreement date. Mr. Hari had received a down payment of 15 lakhs by cross check from Rajesh. Cross check is not important. Account पे ही cross check चाहिए हमें. Please remember, आपको institute बहुत बार confuse करेगी. सिर्फ cross check लिखकर. But for your examination purpose, cross check is not important. Account पे ही cross check is important. On agreement date, please take the implication assuming that Hari and Ramesh have purchased the property for 75 lakhs. So now please say the implication. So everyone please pay attention. सबसे पहले, when Hari is selling this property, he is selling the property only for 90 lakhs. यहाँ से 110% करो आप, it will come 99 lakhs. Your stamp duty is still away from this, right? So as it is stock in trade, which section will be there? 43 CA. And we will consider sale value as stamp duty value. But which value you will take? You will take value 150 crore. Why? because when he given advance, the advance was not through account paid cross check. It was only cross check. See here, they have mentioned the same thing. In the hands of Hari, section 43 CA will come. Why? Because it is a stock in trade. And here, as the stamp duty is above 110% of actual consideration, you will consider your value as, wait a minute, 150 lakhs, and your purchase price is 75 lakhs. So profit is how much? BGPP 75 lakh rupees. Are you understanding? So this is the very important, very interesting question. But don't stop here. There is one more implication here of implication in the hands of Rajesh. So Rajesh का क्या लेना देना है? तो राजेश का भी लेना देना है, because हमने पढ़ा है section 56(2)(10), which says that if you are receiving any property for less than stamp duty, and the difference in the stamp duty and this is more than 50,000 rupees, even the difference is taxable in your as a gift. So guys, here राजेश भाई को 90 लाख में प्रॉपर्टी मिली 150 लाख की. 150 लाख हम क्यों लेंगे? क्योंकि एग्रीमेंट डेट के दिन क्रॉस पे अकाउंट चेक नहीं दिया था. So 60 lakhs would be also taxable in the hands of Mr. Rajesh. Everyone got this? Now, so this is the first part of this question. So see, property, see, they know maximum black money is in the property market, right? So to curb this, what happens generally, what people do, they sell the property and they give much of part of the money in the cash. To curb this, what they have said, you can never do any transaction less than stamp duty value. If anyone sells less than stamp duty value, even he will be considered in 43 CA or 50 C, and the one who is receiving, even he will be taxed. The difference, if the difference is above 50,000 rupees. Are you understanding, everyone? So this is a very interesting thing here. So now see, as Hari was selling is at a stock in trade, 43 CA came into picture. What they have further said, would your answer be different if Hari was share broker? So if Hari was share broker, in that case, the property is not stock in trade. The property would be capital asset. So section 50C would come into picture. See, section 50C would come into picture here. And again, the stamp duty value would be taken as on date of registration, because as on date of agreement, you haven't paid anything in account paid cross check. And in the hands of Rajesh, it is same. It will be taxable in income from other source, as the difference in stamp duty value and actual consideration is more than 50,000. So please understand this condition. So if a person sells it as stock in trade, section 43 CA will come. If he sells this as capital asset, section 50C will come. And what this both section says, that if your sell consideration is stamp duty value is more than 110% of sell consideration, stamp duty value itself will become sell consideration. And this is in the hands of giver or seller. In the hands of receiver, 56(2)(10) will come. If the difference in stamp duty value and sell consideration is more than 50,000. So it will be taxable. The whole amount will be taxable in 56(2)(10) under the receiver's hand. So you just note it down, guys. And mark that question important. Done, everyone? Okay. So with this, we finish our income from other source chapter. Now we will move to the next chapter after taking a 5 minutes break. Okay. So let's have a break of 5 minutes and then we'll move to the next chapter, that is your clubbing of income. Now all chapters are very small. We will finish clubbing as well as a set of carry forward in this session. and then the balance chapters we will take tomorrow. That is your deduction and your TDS chapter. Deduction and TDS chapter, there is nothing very much to teach into that. They are just one liner deduction and TDS. That's what I'm going to take. Okay. So before going that, let's take a break of 5 minutes and then we'll continue from here. In the meantime, if you have any queries, please post down the same. So I will take your queries as well. Yes. Everyone clear? You don't have any queries so far? None of queries I'm able to see in the chat. Are you guys so much clear about everything or you don't understand anything? If you are so much clear, there are only two reasons. Either you understand everything or you don't understand anything. What is the case? I hope it is a case number one. Won't say me anything, guys. Is it really so much difficult to message on live chat? If I'm there in Udupi now, I'm going to definitely meet your class. I will specifically ask Ram sir to ask you all to come in Udupi. Because are you guys really so much silent in your real class as well? I don't feel so. अरे अब तो कुछ मैसेज कर दो. Okay, let's go with our next topic. The next topic is your clubbing of income. Now, when income of someone else is also get added to your income, it becomes your clubbing of income. Okay. See, as the topic name suggests itself, income of other persons included in assesses total income. So someone else total income is included into your case. Okay. So clubbing of income will happen. The first case is the clubbing of minor's income. Okay. I feel guys, you guys are not live. Just scroll to the right, come to the rightmost part of your class, so you will be very much live with me. Or else I feel you are quite back. Okay. So now first thing is that the income of a minor is getting clubbed with those parents whose total income before the clubbing is highest. So now here, what exemptions are given to three such minors? The first one, who earns the income through manual work. Second one, who earns income due to his own skill and talent. So like if anyone has gone into singing competition and earned some reward. And third, minors suffering from disability. Other than this, all the income of a minor will be added to the parent's income. And yes, they will also get a discount or a deduction of 1500 per children per year. Okay. So please pay attention. If a minor earns before that, a minor earns income from any three of these things, either manual work or due to his own skill and talent or due to disability or he's suffering from a disability. If he's earning any income, that is going to be taxable in his own heads. Other than that, it is going to be clubbed in the parent's income whose total income is higher than the other persons, whose total income is higher. Also, please remember, they'll get a 1500 rupees deduction in whatever the income is there. So if the income is in lakhs, still 1500, income is 1000, still 1500. Income is 500, so only 500. Okay. Further, please remember, this 1500 is for all different children's. Don't club iska bachawa either. Nahi. Single children 1500. If his income is only 500, only 500 will be the deduction. Okay. Going further, the asset transferred to spouse. So pay attention here. If an individual transfer any asset to his or her spouse without consideration or for inadequate consideration, even this income is going to be clubbed in the hands of the transferor. So if the asset is transferred from husband to wife, okay, and any income. See, we are not talking about the assets value. Assets value is taxability is seen in income from other source and capital gain, where we have already seen that if you receive any asset from your relative, it is tax free for you. But now here, the income on this asset, if that is generated, that income on this asset will be clubbed in the hands of transferor. Pay here. Then the income from such asset is taxed in the hands of spouse on whom such income tax is to be paid by. That is transferor. Okay. Also remember, now in the relation when husband transfers this asset to wife, even though the asset is in the wife's name, but the income generated on that house will be calculated in the husband's income. Further, the thing is what the relationship at the time of transfer and as well as at the time of income generation of husband and wife should exist. Further, if the provision is not applicable, if it's with connection with the Leopard agreement, and if house property is transferred by individual to spouse or minor children, or without any adequate consideration, such individual is treated as deemed owner. This is what we have learned in income from house property. I have said you there as well that we will see a relative provision in clubbing of income. So if a person transfers the property to spouse or children, it comes under deemed owner, even though he has transferred the asset to someone else. So he will be deemed owner. Also, the income generating on such asset will be taxed in the hands of the transferor. Further, asset transferred to son's wife. Again, for inadequate consideration or for no consideration, asset transferred to son's wife, that is daughter-in-law, this will be also taxable in the hands of transferor if any income is generated from such asset. Again, the relationship of father-in-law and daughter-in-law should exist at the time of transfer of the asset as well as at the time of or before. At the time of transfer of asset as well as the time of generation of the income. Everything clear? Further, asset transfer to any person for benefit of spouse or son's wife. So what happens? I have transferred this asset to someone else and said him, whatever income generates, please give it to this, to my wife and my or my son's wife. Again, this will be a clubbing of income provision will be attracted. Even though received this income in the hands of son's wife or wife, this will be taxable in the hands of the transferor of the property. Next case is income of spouse from concern where assessee has substantial interest, where assessee is having a substantial interest, and the wife is generating income from such company, firm, or LLP. In this case, if this income is not reasonable, if she doesn't have such professional qualification which is required for that salary, in this case, it will be clubbed in the hands of the yeah. Is it there? Yeah. Okay. So please remember, but if wife has such professional and technical qualification for this work, then no clubbing of income. But if wife don't have such professional and technical qualification, clubbing of income will be there. Thereafter, the next situation, income transfer without transfer of asset. What I have done now, say I got to know that if I transfer the asset, the income of that is going to be still clubbed in my hands. So what I do, rather than transferring the asset, I just transfer the income. So again, in this case as well, the transfer of income without transfer of asset, the clubbing of income will be applicable and the income will be taxable in the hands of the transferor. Okay. Further, irrevocable transfer. In case of irrevocable transfer, income is received by transferee but tax in the hands of transferor. Again, if there is any irrevocable transfer, so I have transferred this someone without which we can revocable, which I can revoke it later on. So for temporary, I'm transferring to someone else, and I say that I can again transfer it back on my hands. So income on such transfer will be also taxed in the hands of the transferor. But if this is revoked after the death of the beneficiary, then it won't be clubbed. Okay. Any asset transfer to HUF. If any individual transfer any asset to HUF without inadequate consideration, then the income from such asset received by HUF but still will be taxable in the hands of the individual. Okay, but on the partition of HUF, if the asset is transferred, then there will be no such provision. But other than that, if you transfer any asset without inadequate consideration, this provision will be applied. So these are certain cases of your clubbing of income. Okay, I will just quickly repeat them. If you have any query, any cross transfer is remaining, I will just quickly repeat them. If you have querying any of this, please let me know. I will take that accordingly. First, income of children. Now, income of children is quite important and very much what I'm saying. Just a second. This. Yeah. But it's still below. Okay. Income of a children. So if there is any income of children, so if this income is because of the three exceptions, camera is not getting adjusted. Yeah, it's fine now. Please remember, if the income is because of these three exceptions, okay, that is manual work or in talent or because of disability, then it will be taxable in your hand, or else it will be fully taxable in the clubbed in the hands of parents whosever total income is higher before the inclusion. Okay, then it was to the asset transfer to the wife or son's wife. Okay, the income is going to be clubbed in the hands of transferor. Then we have seen the next one, that is if the asset is transferred to someone else and said that the benefit has to be given to the wife or son's wife, again there will be what we say, clubbing of income. Further, we have seen that if the asset is not transferred, only income is transferred, still there will be a clubbing of income, and there is revocable transfer or transfer of to the HUF, again the clubbing of income provision would be there. The next comes into picture is cross transfer. What is cross transfer? So pay attention. Say if there is A and B. Okay. Say if B transfers to A's wife 10 lakh rupees and A is transferred to B's wife 8 lakh rupees. They both invest this into FD and they generate 10% interest. So B's wife get an interest of 80,000 and A's wife get an interest of 1 lakh. Okay. So now see, it is a case of cross transfer. So what is the common amount? What is the minimum common amount in both? Is 8 lakhs is the common amount, right? Matlab 8 lakhs is the minimum which has both has transferred to each other. So 80,000 will be clubbed in the hands of their respective husband, rather than that to be taxable in the hands of wife, as it is a case of cross transfer. Okay, so you can see here in the example as well. So which is the common amount? What is the common amount? 48,000, which is the minimum amount, I will say. So minimum amount will be clubbed in the hands of their respective husbands, and the balance, if there is anything, that will be keep clubbed in the hands. It will be taxed in the hands of their wives. Everything clear? Next, where any asset is transferred by individual to his spouse or son's wife, and such amount is invested in the business and transferred and proportionate profit. Now pay attention, this is also very interesting. Okay, if say husband gives some amount to wife, okay, and she invests this into the business, and this capital amount gets into the capital on the 1st of April itself, then whatever profit they earn during the year, proportionate profit will be clubbed in the hands of husband. Okay. Another example, if he gifts on 5th of May, so is it formed in a capital on 1st of April? No. So in that year, no clubbing. But next year, this amount came into the opening capital, the clubbing will be applicable. Proportionate clubbing. So say the total capital is 10 lakhs, profit is 50,000, 5 lakh given by husband, 5 lakh by wife's gift, husband's gift. So in this case, 50% profit will be clubbed in the hands of husband. So you can see this example. See here. Capital as on 1/4/21 is 7 lakhs. On 10/4/21 gifted 3 lakh. Total capital is 10 lakh now. But as it was gifted between the year, no clubbing will be there for the financial year 21-22. But for the financial year 22-23, has the gifted capital being in the opening capital? Yes. So clubbing would be applicable. So see now here, profit for 22-23 is 6,30,000. So husband given capital of how much? 3 lakh rupees as a gift, right? So 3 lakh upon total capital, 1,35,000 proportionate capital will be clubbed in the hands of husband. Proportionate income. Okay. So please remember, clubbing of income is not taxation of the gifts. Taxation of gifts is even seen in the income from other sources. We are trying to evaluate the income on these gifts, if that is earned. So this income gets also clubbed in the hands of transferor if is following of the cases. Everyone clear? Just solve this question of Vaibhav in your study text, study material. This will give you a good understanding about this opening capital. See here, the Vaibhav has given a gift of 5 lakh on 1/4/22 itself. So as he have gifted on the 1/4/22 itself, it is going to be clubbed. Got it? Why? Because it is the part of the opening capital. 8 April ko aa gaya, it is opening capital ka part. So the 22-23 clubbing will be applicable of the proportionate capital. Okay. Also, further, second generation incomes are never clubbed. For example, see, Mr. Sumeet gifted 10 lakhs to Mrs. Purva. Okay. Interest upon this 10% will be clubbed in the hands of Mr. Sumeet. Now, next year, when now this total becomes 11 lakh. Okay, pay attention. I will write it down nicely so you understand it clearly. So Sumeet has given 10 lakhs to Purva. First year received interest of 1 lakh. All the 1 lakh will be clubbed in the hands of Sumeet, even though it has been received by Purva. Okay. Now total how much Purva have? 11 lakh. Next year again 10% interest would be how much? 1.1 lakh. So 1,10,000. Remember, only 1 lakh would be there in the Sumeet's hand. 10,000 would be taxable in the Purva's hand. So second generation income, if there is anything that is not going to be clubbed. So interest पे interest जो आया, that is not clubbed. Okay, but जो पहले से ही था 1 lakh का 10%, that is clubbed here. Everyone understood this example? Come on, say me quickly. This is something new, maybe new or interesting you would be learning, or something where institute can ask you a question. Next year, if you generate more income, say 1,21,000 interest you get, again only 1 lakh will be clubbed and 21,000 will be taxed in the hands of Purva. Have you understood this example? Come on, say me yes or no. Okay, very good. With this, our chapter comes to an end. So we have done the revision of clubbing of income. Yeah, Bhavya, I will repeat it. Pay attention. I will give one more example. Say, I have given 10 lakhs to my wife. Okay. First year interest 10% came. So this is Sumeet here. This is my wife here. That is how much? 10,000. Sorry, 1 lakh. 10 lakh के ऊपर It is 1 lakh. So this complete 1 lakh is going to be clubbed in the hands of Sumit. Okay. Now next year, what happened? The FD done of 11 lakh. Interest 10% comes to 1,10,000. Okay. So from this 1,10,000, again, only 1 lakh will be clubbed because 1 lakh was the only, because 10 lakh was the only capital given by the Sumit and only 10% of interest is accrued on that. The balance amount, the extra amount will be taxed in the hands of Purva only. Similarly, say next year we got interest 1,21,000. Again, only 1 lakh will be clubbed because that's the only interest that is earned on the Sumit's gifted capital. The balance would be clubbed in the hands of Purva itself. Got it, Bhavya? Bhavya, are you clear? So that's why it is said that clubbing of income are not applicable on the second generation income. It is only applicable on the first generation income. Yes, Bhavya, welcome. That's why I'm sitting here. Let me know your queries anytime. Okay. Let's take this last chapter for today. Set off and carry forward of losses. Very simple, very straightforward chapter for you guys. You must be knowing this very much nicely. Okay. So losses from the businesses and income from almost all heads of income can be set off and carry forwarded. Okay. So there are only certain rule exceptions to this. Just a minute. Okay. There are only certain exceptions to this. The exception is what? Arey yaar, this is done in this way. Okay. So see now here. First, you will always do intra-head adjustment. Okay. Means losses setting off in the same head. If they have same head, other income as well. If no, then it will go to the inter-head adjustment. So you must have done any in school and colleges, intra-college and inter-college matches. Intra-college or intra-school मतलब एक ही school के अंदर with one division, another division, one standard, another division. When we say inter-college, it means two different colleges, two different schools. Similarly, all the losses will always go for intra-head adjustment first. And if there are still losses, then they will go for inter-head adjustment with certain exceptions. But always remember, a loss occurred during the year. Only in that year it can go for inter-head adjustment. If it is once carry forwarded, it can never go for inter-head adjustment. It will do only for intra-head. So what this mean? So say, for example, in the year 2021-22, I have listed loss in PGBP. So profit from other PGBP can be set off in this year. So profit from income from other source, just an hypothetical example, it can be set off here as well. But next year, if it is carry forwarded, it has to be set off with PGBP profit only. It can't participate in inter-head adjustment. So inter-head adjustment can be done. Within two heads adjustment can be done only in the year of securing the loss. Understanding? So certain rules for your intra-head adjustment. Other than this, you can adjust any loss with any profit. Other than these four exceptions. What are these four exceptions? First, speculative business loss can be set off against only speculative business income. That's why I have said you keep speculative business profits separate, because the loss from the speculative business can be set off with only and only speculative income. Next, specified business loss can be set off against only specified business income. Please remember, normal business loss can be set off with both of them. But loss from speculative or specified can be set off with only speculative and specified. Everyone clear? Next, long-term capital loss can be set off to only long-term capital gain. And loss from owning and maintenance of horses can be set off only to loss profit from owning and maintenance of horses. So these are the 5 exceptions for intra-head adjustment. खुद के head के अंदर adjustment करना होगा. तो इसके अलावा आप कुछ भी कर सकते हो. Specified का specified को, speculative का speculative को, income owning and maintenance of horses का owning and maintenance of horses को, long term का only long term को. Okay. Then, in case of intra-head adjustment between two heads. Okay, before that, go through this one nicely. Try to remember all this here in class itself. Everyone clear? Now, when we talk about inter-head adjustment, in this 4 goes as it is. And 2 gets more added into this. 1 is that short-term loss can be set off to only short-term or long-term. So please remember, long-term के लिए मदद में सिर्फ long-term ही आ सकता है, और short-term के लिए long-term भी आ सकता है या short-term भी आ सकता है. Okay, and loss from business cannot be set off against salary income. Other than that, it can be set off for anything. And a point to remember, carry forward loss can't take part into inter-head adjustment. Clear? So these are certain exceptions. Other than this, all the set off and carry forward can be done. I'm giving you next 3 minutes time. I want this now, right now, to be learnt itself. See, these small chapters, please finish in the revision classes itself with me. So then you won't have burden of this, because these are small chapter, but this create a big burden. Or itne chapter bache hue. No, these are very small chapter. Hardly 1 hour chapters are there. So do all concept with me and do the questions the practice after your class. So it will finish right now itself. Okay. So other than this, all the losses can be set off with each other. Let's go through it. I'm giving you 3 minutes time. Please try to remember all of them right now itself. Ask me if you have any queries. Everyone done? More 1 minute to go. Yes, everyone remember this? Okay, so let's quickly recap. See here, speculative loss to speculative income only, specified loss to specified income only. Further, what is it? Owning and maintenance of horses to owning and maintenance of horses income only. Thereafter, long-term capital loss can be gained to long-term capital gain only. And then we added two more. Short-term capital loss can be go to short-term as well as long-term capital gain. And the last, business loss cannot go to salary income. Rest everything is fine. Okay. Intrahead in the year of acquisition. If not, then they go for interhead. Interhead can be done only in the year of securing the loss, not any carry forward losses. Okay. Further, there is amendment. Income from transfer of virtual digital asset, no deduction of any loss against this income, no set off, no carry forward. So if you secure any loss in your cryptocurrency, in that case, there is no loss that can be set off here. Okay. Just go through this. See, if you have salary income, loss is obviously not possible. If you have house property income, loss from the house property can be set off to interhead or intrahead, but maximum 2 lakhs only. What Vaishnu is asking, even depreciation loss can be set off against income from salary, right? No. See, depreciation loss is a business loss, na? So that can't be set off to the salary income. Okay. House property also loss. Please remember, you can only set off up to maximum 2 lakh only in a financial year. Balance you have to carry it forward. Further, PGBP speculative का speculative को जाएगा, specified का specified को जाएगा, other होगा तो वो intra head हो जाएगा. Just remember one thing, losses from the speculative business or specified business can be set off to the profits of the speculative or specified business. But loss from a normal business can be set off to specified business income. Understand is what I'm saying you. Say if there is speculative loss, it can be set off to only and only speculative income. If there is normal loss from PGBP, it can be set off to speculative, specified or normal business income, any income other than salary. So this is one of the tricky points that you need to remember. Okay. Short term can be set off to anything, long term will be set off to only long term. Income from other sources. If there is owning maintenance of horses, you can set off it by owning maintenance of horses and carry forward. Other losses cannot be carry forwarded for only income from other sources. Okay. So this is a very interesting what chapter, guys. There are lots and lots of questions of this, and I will suggest you please practice maximum questions of this, because this is a very scoring chapter and I don't feel you should lose any marks here. Now, carry forward of losses. So this is the chart which says you how many years you can maximum carry forward your losses. So see, specified business, government is promoting you to do it, unlimited. Unabsorbed depreciation, unlimited. And set off to any income other than salary. Okay. Other than this, all losses are generally carried forward for 8 years. But owning and maintenance of horses and speculative have special 4 years category. So this way you can simply remember, specified and unabsorbed depreciation, unlimited carry forwarded. Speculative and owning from maintenance 4 years only, because they are separate, something different. All other losses can carry forward for 8 years. And other than your loss for house property and unabsorbed depreciation, all other return need to be filed, then and then only you can carry forward loss, or carry forward loss is not possible. Okay, just go through this chart. Remember this chart. I'll be back in 2 minutes. Remember it right now itself, guys. Just 10 minutes and then we're done, guys. Done, guys? Okay. Everyone done? With this, also your chapter comes to an end. Also, see, guys, whenever income is exempt, losses do not have to do anything. Again, expenditure for such income is not allowed. 14(8) disallowance is attracted, if you remember. Losses from lottery, card game, races, etc. are not eligible to set off and carry forwarded. It's your mistake, you have done loss here. Brought forward losses of a business can set off even if business is discontinued. So even if I discontinued a business, still the brought forward loss can be set off with the other business income. Okay. Further, that's it. With this, we finish our this chapter as well. Okay. Yeah. So now, guys, tomorrow, just pay attention. Yes, guys, if you have any queries, please let me know. Any queries about this, any particular thing, any particular concept that you need to be repeated, please let me know. I'm available for you always. Sorry, index, I don't have index. Okay, no problem. Now, see, guys, which chapters are remaining of our? We'll just check it here. Yeah. See, we have come a long way. We have done exempt income, HP, salary. We have done PGBP today. We have done capital gains yesterday itself and income from other sources today. Further, we have done clubbing and set off as well. Tomorrow in the session, we will finish deduction and TDS. Also, if you want any particular part of any particular chapter to be repeated, please let me know. That we'll do tomorrow. Okay. And in the evening session tomorrow, as you don't have any session tomorrow in the evening session tomorrow, we will do this GTI questions. Okay. So in the evening session tomorrow, we'll see these gross total income question. Other than that, also if something is required by at your end, please let me know. I'm available for you. Okay. So if I'm available for you, make maximum of me. If you want any particular part of any of this chapter to be repeated, let me know tomorrow in the session. And in evening session, please be well prepared because the evening session is going to be an amazing session of solving your gross total income. It will be amazing only and only if you are solving it. If I am solving it or only I am going to do it, then it's not for my practice. Fortunately, I have been CA right 4-5 years back. Okay. So please, guys, get ready and come with the preparation for coming for this session. Your law RTP session tomorrow evening. Arey yaar, I seen it was blank in your schedule. So in tomorrow morning, do you have anything? Tomorrow morning, do you have anything? How much time is the RTP session? Okay, so what I will do, I will ask them, I will just confirm you, don't worry. RTP of which subject it is? Two hours. Okay. Law. Okay. So I will just request them if it is possible. I don't say it will be possible. If the law RTP session can be pushed out here. Okay, I'll just request because in the morning I'm not available tomorrow. But let's see if that is pushed down here or what we can do is okay, we'll find out something. I will just ask them if they can just pull this session in the morning. If not, then I will try to manage something. We will do some or other thing. We'll do कुछ ना कुछ तो जुगाड़ कर लेंगे हम और हम session लेंगे तो जरूर. Okay, but I have to make you aware of this gross total income question because that are very much important. Have that gross total income question were taken into your classes, into your regular classes. Yes. Were the gross total income questions taken into your regular classes, guys? Okay, that's great. Then, in that case, you will be much more efficient in solving it. But yes, we are going to have that. Okay, so we'll see how many of questions that we can have in that extra session. We'll just have a session of half hour, 2 hours. Okay, not of 2.5 hours. So let's see how we are proceeding it. So tomorrow we'll see the balance chapter. Also, let me know tomorrow. Please go through the syllabus as and let me know if any particular concept or topic has to be again taken. We'll take that as well, and then we'll go forward. Okay, that's it for now. Thank you so much. Bye bye. Take care. And yes, please get with the Telegram channel so you can get all the video rapid revision lectures, which I'll upload it there itself. Okay, everyone, that's it. Thank you so much. Bye bye. Take care. Yes, welcome. Thank you so much. Bye bye.